Welcome to the BNB. Today I am sharing an unpleasant experience in the market that I have been experiencing for a while. You might call it an embarrassing situation, but I rather believe it being an educational situation for all of you, my viewers, and afterwards I will give you my future game plan for this particular situation. From the title of this video, it's clear what situation I'm talking about. I have a 40% unrealized loss on a stock that I made a video on about a month ago. That stock is scr.to, and for the American viewers, just SCR. Why SCR and scr.to? scr.to is listed on the TSX and SCR on the Nasdaq, two different exchanges, and one is primarily based in Canada and the other is primarily based in the USA. Very prominent company that was also featured on CNBC for the opportunity it presents. You can see my position and the unrealized loss I made on this particular stock. Book cost of 5.4k and it's down around 2.2k, which honestly isn't that bad considering my net worth and all my other positions. But I just wanted to get my message across for people that don't have a clue what to do in a similar situation, and especially nowadays when we have a downtrending market for all the retail investor stocks such as Palantir maybe or Tattooed Chef. You can see that the downtrending is really bad and some companies are even down 75%. The reason why SCR and all these retail names are dropping is that these companies are more speculative in nature, especially SCR. It is unprofitable and is waiting for Bill C-218 to pass. Also, their earnings were abysmal. Analysts were expecting minus 25 cents of EPS and they delivered an EPS of minus 45 cents. They missed around 50%, and it is very bad to see these kinds of misses in companies. But to be honest, I was expecting that. They rarely meet analyst expectation because the CEO is trying to reach new height as quickly as possible. And in this situation, I feel like a pre-IPO investor, someone who is a venture capitalist. The company is getting approval for its scr.to application in more and more states, which is a good news for investors, but the price drop is not. I had this drop totally expected, and this investment wasn't made as a value investment. I bought it for the growth opportunity it presents in front of itself in future years. The TAM, total adjusted market, for this company is going to grow immensely when Bill C-218 is going to pass. Market cap of this company is $1.13 billion, and the industry in which SCR is currently hasn't matured yet. It is a growing industry, so that is a very important factor you need to remember. Now, if we look at the market cap of a competitor of SCR, you can see DraftKings, a US competitor that is valued at around $23 billion. So just keep that in mind, and if SCR just keeps executing on its US markets, the company can easily grow its market cap to $5 billion because the Scr app is the second most downloaded sports app in North America. So they can easily market their Scr.bet app on the Scr app itself. That would be a very easy thing to do, especially to a sports enthusiast audience. Now, if you want a detailed analysis on the company, don't hesitate to put it in the comment below and I will proceed to do it in my future videos. And now I'll proceed to my future game plan for this particular stock that I'm really down on. Now that I have a sad situation in front of me, what am I supposed to do? Cash out all my money and sell the stock? Buy another company and hope to get a tax reduction from the losses of SCR? And unfortunately to that I say absolutely not. I am willing to keep the company and I'm hoping to increase my position, especially in rocky time like these. The present numbers may not be attractive, but the future is bright, my friend. And the reason I am able to keep my position and increase my position is because I did a lot of research in it, such as reading the company's 10K, listening to a couple of conference calls, watching earning results come out, watching the CEO speak about the legendary company itself. And that gave me conviction to this day. And if you don't have conviction in a company, you tend to sell it as quickly as possible. And that is a sign of a FOMO investor. So the lesson here is for you to have conviction in your stocks. You should keep it, and conviction comes from research and analysis. not from listening to your friends saying, oh, I bought a company and you should do the same, and you doing after that the same thing, which is not a good thing. And that is one reason all the retail stocks are bleeding out percentage. It's because many of those retail investors have lost a lot of money, and they haven't done the necessary research and find themselves losing 10 to 50% of the initial investment, and they get scared and they sell. I wish I had that Kramer button. Sell. In the future, I will keep documenting my situation with this stock particularly, and I hope you enjoyed this video. Share the video with someone who is losing a lot of money in the stock market right now, so he can understand what to do, and also buy some Charizards, because Charizards keep going up. Subscribe to the channel, and if you want, like it, play some Pokemon like always. Actually, don't play it, just buy the Charizards.